Hi, my name's Adam. Welcome to the channel. Thanks for joining us today. Today we're going to talk about capital and current expenditures on properties. So if you have a property, maybe it's a second property or a rental property that you're putting money into, how do those expenditures work? A lot of you ask this question, I don't know if I can offset rental income from this, or is it adjusting my cost base on this? So we're going to break all that down in this video. Again, this was through, I read a daily article on advisor.ca, and this was an article that popped up this morning, and I thought, this is a great article for our client base because a lot of our clients have rental properties, have a vacation property. So if you own anything beyond a principal residence, then this video is for you. If you don't, you just have principal residence, maybe you know someone that does have a secondary property or you're thinking about getting it, this is important for you as well. Before I jump into the content, just a reminder, our Investing Academy, if you haven't already joined, make sure to join. $19.99 a month, you get a ton of content. Our masterclass, investing courses, mortgage courses, a bunch of content, as well as a Discord. And the Discord to me is the most valuable. It's a place to jump on, ask questions, and talk with over 1,000 Canadians in a structured community where you can talk about the investing, about planning, about taxes, about real estate, about mortgages, all of those things that encompass kind of, financial retirement stuff, as well as our fee for service. Again, if you're lost in your financial plan, you don't have a plan, you're getting close to retirement, we offer fee for service planning. We'll put the link below, parallelwealth.com/planning. If they make sense for you, if there's something you're looking for, then you can book a call with me or just move forward. You can pay right online there and get the financial plan started. Current expenses and capital expenditures. Now, there's a big difference between the two. So again, current expenditures is something that maintains your home. Let's use an example of rental property. You have a rental property and a plumbing fixture goes or a light fixture goes. Those are current expenditures. So if you spend, let's say, $500 on a plumber to come in and replace the plumbing fixture and all of that, that $500 is offset against any rental income that you have in that year. That's a current expenditure. A capital expenditure would be something like replace the siding on the house. So all the siding on the house needs to be replaced to extend the life of the home. That would be a capital expenditure and would bump up your adjusted cost base so that down the road when you sell the property, there's overall less of a taxable gain on that property. Now, if the rental property we're talking about isn't actually a rental property, it's a second property for personal use. So let's say you have a cabin on the lake, you don't rent it out, it's a secondary home, but it's for personal use only. Any current expenditures that you put into there, you cannot deduct that against anything else. Okay, those expenditures are just flat out expenditures. And that's where sometimes it's worth renting out that cabin a little bit during the year. And again, talk to your tax accountant on this to see if it makes sense for you. But if you can rent it out a little bit, if you're putting current expenditures into that property, then you can deduct it and really come out net neutral and have a way to write off some of those expenses. So again, if it's for personal use, you cannot write off current expenses, but you can write off capital expenses. Because again, if you bought your cabin for, let's say, $300,000 and you're putting capital expenditures into it, a new roof, new siding, new windows, big items, but you can actually increase your adjusted cost base again. So down the road when you sell it or pass it on to a family member and there's a taxable event, that taxable event's going to be a little bit smaller because it's what you paid plus any capital expenditures, that's your cost base. And then what you sell it for, anything in between, currently is a capital gain. The more we can drive up that cost base, the less tax bill we're going to have when we sell that property. So CRA has a guide out there, T4036, rental income. So capital expenses are costs incurred to extend the useful life of the property or improve the property beyond its original condition. So those are really the two triggers. Now, as I was reading through this article, again, we'll link the article below because it's a great article. He used the example here of if you were to paint the house, that is a current expense. It's got a finite time, I guess. So CRA considers painting the house as a current expense. So if it's personal use, you would not be able to deduct that. If you were to replace siding, that's a capital expenditure. There's these kind of gray areas. In my opinion, that's a gray area. If I paint to me, that's a capital expenditure. I'm extending the life of the house because if I don't paint it, it's gonna start, rotting away or whatever. I need to protect the house. To me, that is a capital expenditure, but per CRA, painting the house is a current expense. As you do these rentals, make sure you keep all receipts for everything and then have that discussion with your accountant to see these things that I've done, do they fall under current expenses or do they fall under capital expenditures? Your accountant will be able to help decipher per CRA rules which category, which bucket they go into, and then help you finish your taxes off from there. So one question to ask is, does the expense maintain or improve the property? And this goes back to that, painting the house versus putting new siding on. So that's really something that you have to look at too. Like, is this actually maintaining the house? Again, as you have rentals, there's a lot of maintenance to it, right? So that writes off against your current expenditure. I guess a lot of you are going to ask, okay, well, Adam, I have a rental property, I'm generating revenue. I'm always looking for expenses, but am I better off having current expenses or capital expenses? Because sometimes, again, let's say the outside of your place needs to be repainted, but you could do new siding. Which makes more sense? And it's really going to be dependent on your situation. There's no right answer. I think you have to look at the cost of doing both. Obviously, painting it is going to be much cheaper than putting new siding on. Now, again, current expenses, if you have rental income, any current expenses can be deducted right away. So, you have $10,000 of rental income coming in, $5,000 of current expenses, then, your income drops to $5,000. So it reduces the tax bill now. Whereas capital expenses reduce tax bill down the road. So one gives you a benefit now, the other gives you a benefit down the road. I would say personally, I would always try and create some current expenses to reduce my current income. Again, if that's your only income, then maybe not. But like for me right now, I'm working out of an income. If I had a rental property, which I don't, but if I had a rental property, I would want to create as many current expenses as I could to offset the income so that it doesn't kind of add on to my current income level already. If I was retired and I just had one rental income and I wasn't, taking my CPP and OAS and I could kind of massage the RSP and TFSA a little bit, then I may not be as worried about that. I may focus more on capital expenditures. So again, it depends on how much other income you have, stage of life, all of that. I will say this, and this is a bit of a side note here, but I would say 95% of our clients that have a rental property of some sort, whether it's commercial, industrial, residential, doesn't matter what type of property it is, about 95% of our clients liquidate that property within 5 years of retirement. And there's two reasons for this. And I'm not saying you should, I'm just saying that's what we see. That's the trend we see. A, people are tired of dealing with the rental, whether it's dealing with tenants or maintenance. I'm down in Mexico spending 6 months down there in retirement. Retirement's supposed to be enjoyable. And I think a lot of you that have rental, even if it's like a commercial property, which is typically quite hands-off, you can hire a property manager, deal with all that. There is a point where you just become tired of it. Yes, someone else is dealing with it, but it's still there. It's still in the back of your head. It's still an issue. You still have to deal with it. Reason number two, and this is probably a bigger factor, there's a point in retirement where the equity in the property is worth more than the cash flow of the property. So as you buy a property, maybe when you're still working and you're younger and you're kind of building up and you're thinking like, hey, I'm going to build this property, I'm going to create some cash flow out of it, I'm going to pay it off over time, it's going to be a great nest egg for retirement. When you hit retirement, often we lose why we bought this in the first place. And it was to have someone else pay you rent, pay off that mortgage, and create an asset. So again, a lot of you might have a rental property. It might be worth, depending where you are in Canada, let's say $500,000. It's mortgage free and it's generating, $1,500, $2,000 a month of rental income. But you have a $500,000 asset sitting there. And that's where the asset is worth more than the ongoing cash flow. As you plan for this is something else. As you enter or get close to retirement, if you have a rental property that you're planning to liquidate, is there capital expenditures you should be doing to it before you liquidate it that will add value, right? It's like selling your house, right? So, my wife and I someday will probably sell this house. Should we replace the floors and paint the house and do new trim and certain things and spend $30,000 on the house to get an extra $50,000 or $80,000? Like there's some things, capital expenditures that are worth doing to get a bit more money. Right? So that's where that comes in as well. One thing that I found really interesting in reading through this, and I think this is the biggest thing that stuck out to me, is a lot of people, as they have rental properties, they maybe don't maintain them as well as they should. And what happens is little maintenance things become a major renovation. You don't keep up with certain things. You have a tenant move out and you end up doing like a huge renovation to the property. And the renovation is caused by improper maintenance to the property. CRA actually views that as a current expense. So again, this is where you need to talk to your CPA to figure out where these expenses lie for you and your situation. Let's say you didn't keep up a property. You had a rental in your rental property for, let's say, 10, 15 years. A great long-time tenant, but part of that is you didn't really keep things up properly. When they moved out, you had to do like almost a massive gut reno to it just to keep the property up. Not to enhance the value of it, but it was just really property maintenance that all came at one time. Typically, CRA will see that as a current expense. Let's say you spend $50,000 just getting it back up to level, and it's a current expense, but you didn't have any rental income for that year because you were fixing up the property, that may be an issue. So again, you want to talk to your accountant. Can you carry that forward? What's that? How does that work? Make sure that you kind of think these processes through before you actually follow through with the work, because the timing of this might matter. So again, as you kind of treat and manage and maintain and improve your rental properties, again, whatever facet that is, make sure that you understand, is this expense deductible today, or is it deductible when I sell the property down the road? Again, for a lot of you, if it's a family cottage, that may be a long time down the road. Talk to your CPA professional to figure out your expenditures. Keep receipts for everything, track everything. Where do they fall? Do they fall under current or capital? And that's how it's going to determine if you're going to deduct today or offset or increase your adjusted cost base for down the road. So hopefully that helps you out. I know a lot of you do have these rental properties and you deal with this day in, day out. If you have a rental property, or if you had a situation that was a bit unique, leave a comment below, share that with others. I know you guys love to chat below, and I love that. That's part of the community here, and I do appreciate it. So thanks again for joining us in this video. I really do hope it helped you, and we'll see you in the next one.